In this example, we're looking at computing the cash flows from investing activities, particularly with plant assets. So you can see the T accounts in front of you for our plant assets, and then their accompanied accumulated depreciation for our company. So if we just kind of analyze what's going on with the T accounts, it will help us determine our cash flows from investing activities. It did give us some additional information that says Caruso's income statement shows a gain on the sale of a plant asset of $17,600. So a couple of things I want to point out. If we look at our plant asset, the disposal here represents where we sold a plant asset, and that would be not the amount necessarily that we sold it for, but the amount that we had it on the books for. This purchases shows where we purchased a plant asset. And this disposal of accumulated depreciation is when we dispose of a plant asset, not only do we have to eliminate the plant asset account, but we also have to eliminate its accompanied accumulated depreciation. So let's take a look at how we can compute the statement of cash flows for the investing activities section. So the first thing we're going to show is the purchase of a plant asset. So right up here, it shows where we purchased the plant asset for $134,400. So since we debited our plant asset account for that much, that's how much cash we spent to buy it. So that's why it's in parentheses here representing a cash outflow. Now, the next part is a little trickier in calculating what our actual cash flow in was, because we sold a plant asset, and you can see here that it says the amount of cash we brought in from the sale of that plant asset was $50,800. But let's determine where that comes from. So the first thing we have to take into consideration is that we have a gain on the sale of a plant asset. So we look at, okay, so we credited or decreased our plant asset for $92,000, but then we had an accumulated depreciation. So we've learned in the past that our cost minus the balance of our accumulated depreciation gives us our book value or our carrying value. So the book value of this plant asset was $33,200. So if we were to just have sold it for its book value, we would only have collected $33,200. But since we actually had a gain on it, that means we collected $17,600 more than the book value. So if you add the book value plus that $17,600, that's where we get the cash inflow of $50,800.